5, 4, 3, 2, 1, and we're live. Yeah. I am my own producer in this thing, so I have to talk to you. I have to view the camera and do everything and try to move from one camera to the next and whatever. Okay. Okay. Oh boy. Oh, there's my darling cuz bringing me a cup of coffee. She's so sweet. I brought you something, cuz. You know I always bring you something. Here you go, cuz. Give the people their props. Who's that? Is Grenlick.
Yes.
Can I have a napkin?
Sure.
Thank you.
I'm not staying long with you because Robert is already outside.
Robert is outside?
Well, then, yeah.
Okay. Well. Robert is early today. Probably have a lot of things that he wants to spoke about. Yeah, he's going to be spoken this morning. Good morning, Caroline. How you doing? Okay, so here's what somebody sent me. Mr. Donald, I hope the other journalist that was on the panel with you interviewing the Prime Minister hear what Ray Roberts described them on a GBN interview last night. He didn't say anything about when the PM met with the other journalists before. He's so damn hypocrite and outdated. Yeah, I used the word damn with a lot of mercy. Anyway, so the person goes on to say, well, I guess he was afraid to mention your name and the others, but he gave the impression that the Prime Minister chose who he wants, and the questions was soft and friendly to the Prime Minister. He was so sickening to listen to. I dislike this man, sorry to say. The only thing he said about the press day was he speak who interviewed the Prime Minister. I find I got to stop give him. Hey, morning, Nabila.
Good morning.
How
Good
you
morning, everyone. You could turn the camera to me so that people can see me and stuff.
So hold on, say again.
Open this one.
No, it's
Because you have a tendency of always telling them that I leave you and I go about my business, I go about my merry way. But I think Tuesdays and Thursdays have now become my time outside of the studio, which is actually good because I get a lot of work done.
Good morning. Yeah, you hear insurance you jump up this
No,
morning
we're not frozen.
on YouTube?
No, we're not.
Well, I know. Well, then ask him, Joan. Joan is in Birmingham. So I'm glad to know we're live. Yeah, Errol Bonaparte. Bernadette! Abraham.
Actually, yeah, it's just loading on the YouTube.
It's not loading or it's just loading?
It's just loading.
Okay, so what do I do here? Do I do anything?
I have no idea how do you fix the YouTube, you know?
I don't know.
I'm wondering if it's a us issue or if it's a YouTube issue.
I don't know.
Let me try loading another live feed that they normally have. Like BBC
So why don't you
Live.
try to thingy Harry?
'Cause it
Why
would-
don't you try
it
the
would be
big screen?
Same thing.
Okay.
Duh.
But I had to give that guy my final thoughts. Final thoughts on Ray Roberts.
So it's not a YouTube issue.
Roberts, you need to fix your brain. And anybody who want to tell you could tell you. And if you do something, you want to write an article about me, you can write an article about me. But I guess you won't waste your time and write no article about me. Because you know I'm stupid and do a sense.
Oh, it's back.
You understand? Let me tell you, brethren, fix your brain and stop attacking young people. You are one, yeah, Jones says back to. But Jones in Birmingham. Jones a shutter. Jones like that. You are one of those, Ray Roberts, who continue saying that government ain't doing nothing for young people. But whenever young people do something, they get involved in something, you're the first to do so and criticize and condemn them. I don't know how young people vote for you in the South, and you still want to do so and put yourself in a position to run again in the South. Well, Ray, you're going to lose. So then just don't now. Make the thing good now. Just don't run. You're going to lose. You just stuck in your old ways. You understand? You just like Mr. Nelson shopping Sotes here. And if anybody asks, you ask anybody why Mr. Nelson shop is the oldest building in St. Patrick's and probably the oldest building in Grenada. You understand? And because nobody is paying attention to it, it's falling apart. So nobody paying attention to you, Ray Roberts, so you're falling apart.
dash 30 dash.
Dash 30 dash.
I don't
That
think you
means-
need it to, because I don't know the gentleman. I cannot speak ill of the gentleman, and I am sitting here. No, dash 30 dash. You're done. Say, do go post up hot picture and thing. We do go gay, you know.
Yeah, to go must get on. My dog ready. Where you post that on WhatsApp?
On his Facebook.
Oh, on if it. And how you using the Real FM background?
Because this is where we work. Jeez, for my birthday, you didn't see inside here. I take my photos too.
Oh yeah? So that's all you're doing? How I didn't take one picture here for my birthday too?
Because you don't like photos.
Robert sent me a message and tell me he's here. I know he's here. Why he go inside?
Yeah, long because this is the reason.
Is he
why I
inside
leave
or
the-
outside?
Yeah, inside. I saw the car. I was making the coffee, so I was going back to the fridge to put the milk, and I saw the car. So you know, okay, let me open the door one time.
He's there?
Yeah.
So he cut in style.
Apparently.
My style more he cutting him. Anyway, right now, I done with the guy. I'll focus on my brethren. My brethren is here. Good morning, Grenada.
Good morning,
Love you.
Carico, Peter Matnick.
River Valley Preschool, located next to the River Valley Medical Center in St. Patrick's, reopens its doors for the entire month of May for registration for new and transferred students. Students must be born within the year 2017 to 2018. To register your child, you must have an official birth certificate, an immunization card, and a fee of $15. For more information on how to get your child registered, you can call Teacher Christine Labor at 404-2665, Teacher Mika Fraser at 419-9545, and Teacher Sherry Batiste at 420-9503. River Valley Preschool, moving forward towards a brighter tomorrow.
The Granville Cooperative Credit Union Limited wishes to inform the general public of the following change in Saturday operating hours at our St. George branch. The office, located at the Derek Sylvester Building on Lucas Street, will now be opened from 9 a.m. to 12 noon on Saturdays. The extension is in an effort to meet the needs of our members. Please be reminded that our operating hours are as follows: Mondays to Thursdays, 8 a.m. to 4 p.m. Fridays, 8 a.m. to 5 p.m. noon. St. George from 9 a.m. to 12 noon. Granville Cooperative Credit Union.
Win as much as $5,000 with a $1 inline bet and as much as $6,200 in a $2 backup bet. Imagine $50,000 for a winning $10 inline bet. There's definitely more to win with the Daily Cash 4. More plays, bigger prizes. Twice per day, Mondays to Saturdays. Must be 18 and over to participate. NLA, making your dreams come true while supporting sports, culture, and nation building.
Treat yourself from head to toe with A1 hair, skin, and beauty products from Sarah's Hair and Beauty Supply Store, located on Ben Jones Street in Grenville, close to the New Testament Church. Want to achieve that classy Instagram model look? Come visit us at Sarah's Beauty Salon. We offer expression, pre-stripped, and antibacterial braids, forelocks, jerry curl, deep wave, yaki weave. These front wigs are also available, both synthetic and human hair. Of course, we offer a collection of extensions, Brazilian 100% human hair and Peruvian 100% virgin remedy. We provide our customers with the finest nail care products, eyelashes, do-rags, razors, shaving products, and weaving needles to keep you stylish.
It's a hungry world out there, with everybody scrambling to get a share. Wolves in sheep clothing, boats of prey waiting to swoop down on you, and there's no telling what they'll do. You gotta be careful. You gotta be careful.
In whatever you do, you must be careful. 7:36, that's our time in studios. On that computer, on this computer, on the wall, it says 7:37. So a minute differential there between the two. This one here says 7:36 also. So three computers. Well, according to Sparrow, 60 million Frenchmen cannot be wrong. Good morning, Robert.
Morning, Andre.
How are you doing?
Man, anytime I'm here, it's because I'm doing good.
Okay. Did you know that song? 60 million Frenchmen cannot be wrong.
Yes, I grew up here in Sparrow in his heyday singing that song.
Do you know what he was talking about?
Not really, you know. I come here to
For real? No, for real. You don't know?
No.
No, Robert, come on.
But no, I always the tagline 60 million Frenchmen could not be wrong. This is Napoleon
who started this thing. Every other Frenchman only copy.
But I never get to figure out what this thing was.
Long time when you catch a man committing such time. First thing he
Committing
does
such
ball.
crime.
Yeah, such crime. First thing he does ball. Oh God, first time.
Yeah.
Do you know?
No, well, no inspirer. Tell me if you had
Oral
something.
sex.
Oh.
Oral sex.
Yeah.
That is what the body was singing about.
Well, Sparrow know how to wrap his
Because
message in so fine linen and things. So
Yeah, I'll never forget when the first time I played that song on Aruna here, and Aruna said, "What's you playing it?" Because we were up at she used to be up when we were up at our first location, and I said to her, "Do you know the song?" And she says, "Yeah, that's Sparrow singing. I know he's singing about." I said, "Okay, fine, come sit down." So I played the song again, and I explained. At the end of it, she was like, a shocked young woman realizing that was probably one of the biggest smut songs. Not the only one, because he did a lot of them.
That's what tell you, Sparrow had a way of wrapping it in classical linen, fancy linen,
One of the
and
biggest smut songs
and presenting
ever.
it well.
Yeah, it was just pure smut, but he did it well. So you're singing about oral sex.
But that's the hallmark of the body.
You know, it is said that the French are the best.
Yeah, so they say.
It is said that the French are the best. I guess he was speaking to that, back in the day.
Okay.
It's all right. So
are you a Frenchman?
ask the question again. Ask the question again.
Are you a Frenchman?
Ask the question again.
Are you a Frenchman, sir?
Depends on who's the client. Depending on who's the client.
Oh gosh. Good morning, Grenada.
Let me ask you a question though. Have you ever been to France?
Yes, but
Okay.
but not through this method of transportation.
No, you crazy. Yeah? I thought I was crazy, but you're crazier than me. All right, Cap says good morning. Claudine Houston, good morning to you, Claudine. Jackie Raymond. Jackie's in London. And then Joan had to correct me this morning and says she's not in London, she's in Birmingham. Tamika Moses, good morning to you. And I wonder if Ryan is a Frenchman.
I don't know.
We go find out.
But he's on there.
He's on there.
Yeah.
He's there. We'll more than likely find out if Ryan is a Frenchman too. So how you doing? How's your week?
I am doing good. I'm doing good. Very good at that. It's a lot of things to get done. One man to do it, but you do the best you can. You do the best you can. Sometimes I feel like I'm running behind the day. Most days, yeah. But
I know the feeling, man.
Yeah. When I drove into the yard this morning, I saw your vehicle parked up there, and I said, Andre is a phenomenal guy. Andre has been at this morning program for pretty much 20 years.
Real FM?
Well,
Real FM.
FM.
This year will be 17 for Real FM.
17 years of doing the first shift on any medium is a fantastic achievement. And most mornings you're here without fail.
Yeah, I did GBN. I didn't do very long because they did not have the confidence that they should have had in me. So I didn't do. I did a period when Troy became the programming director, they slipped me into the slot. And bloody hell, it was taking me from afternoon. Rand says bonjour, so that means he been there. Just saw it inside. Yeah, taking me from afternoon where it's a totally different program, and they put me in the morning slot. So I had to,
you had to recalibrate. Your whole approach.
recalibrate the brain and get into it. And when I really got into it, and I'm like, okay, fine, I could do this, I could handle this. I'm liking this. And Troy came and he says, we need another person on shift. I says, yeah, we do. Because what was happening is that I was doing that shift.
And the afternoon as well?
And come back in the afternoon. So I was doing 2 shifts. I said, yeah, we do. We need somebody else for real. And Anthony Greenwich came in.
No, enter Jericho.
Into the system because Troy said, yo, do you think? I says, yeah, bring him in. He got it. He got it going, bring him. So he brought in Jericho. And then we realized that we were still short-handed. So we had a conversation and he asked me about Derek Sion. And well, Derek and I would have worked in the same place before, not like together, because Derek is one of the nice guy, but so very reserved in his thing. So Derek worked at Spice Capital the same time that I was at Spice Capital. So I said, yeah, Derek is a good choice. And plus Derek and Troy used to be playing lawn tennis together anyway. So he brought in Derek. And then the bugger, what he did, he didn't take the morning shift away from me, but he started to do it in and out. So I'm working this morning, Derek the next morning, and I went to him and I said, Troy, stop that stupidness, man. If you want to give Derek the morning shift, just give it to him. I can't handle this in and out. But I said, no, ain't no buts about it. Give Derek the morning show, put me wherever, I'm good. And I was I think it was evening, not even afternoons, it was evening. Kind of tried to hide me but that didn't stop Andre as to, here I am today. I'm still around. I'm still kicking.
Stay with us for a while, bro.
Yeah,
we need that voice in the morning.
I intend to stick around for quite a bit, because I love what I do, and that's the first thing. I love what I do, and anytime I'm stopping loving this, I'm gone. Yeah. And now, and the fact that I am, let me fix my camera again. This is what I have to
The camera working now?
This one,
It's not freezing up?
Well, yeah, it's freezing, but here's what happened. This one is supposed to be the one for you. So what I've done, forget Friezo, and I'm using this one for you.
Okay.
And that one for me. Okay. But Friezo's still freezing. I don't know why. Yeah. So, hey, I'm starting to like it all over again because of the whole aspect of the video.
Oh, yeah.
I'm starting to like it all over again. It presents a new challenge, and I'm going to go for it. I'm going to go for it. I intend, when I spoke to a couple of people who are in no, and they says, hey, first thing, your quality, excellent, and that's a start. Once the quality is good, then we know, okay, fine, we cooking with gas. You see, I'm wearing my nice pink shirt this morning. And I realize I'm not wearing tie, right?
Yeah.
You heard the reason?
No, I didn't.
Do I have to tell you?
Well, you can.
Well, I ironed the shirt this morning. It's just this shirt now has to go away. So I ironed the shirt this morning. And
you forget to iron the tie?
Look at where
your cufflinks?
Look at where this sleeve reaching. They've done long enough.
So this is. I heard you outside explain why you had to bend your
so
into a cuff.
Bend the cuffs and thing and don't wear tie, so you look kind of casual. Like if I planned that, I didn't plan it. That's what happens. So this shirt goes away. You have to put this aside. And
Here the question now. So the shirt gets small?
No.
People always ask me like that.
No. It's like my arms probably got long.
Oh, yeah.
But these are one of the pink shirts that I haven't worn for a while. So I'm like, oh, wow.
Yeah, sometimes it tells you the changes in your body structure. Your clothes tell you.
Yeah, your clothes tell you. So I have to like put that away. Maybe give it to someone who probably will appreciate it. I don't know. I mean, it's a pretty good shirt. I'll just
I almost say give it to me, but my hand longer.
Yeah. So I just wash it, and somebody might want a shirt, and they have a nice shirt nonetheless. So this morning, Robert, we've spoken we've had 3 or 4 programs thus far. Right. So let's make this one the 4th one. And we've spoken about all sorts of different things in a whole melange. But I think it is time for us to start to zero in, because there's so many different aspects of insurance. So I think it is time for us to zero in on a particular type of insurance. And if we did not cover it in total this week, next week, God's willing, we'll go back to it and cover it in total. You, of course, would know when you would have covered it in total. Right. Now, there's vehicle insurance. There is insurance for buildings and homes, and I guess they'll be different. What is for a commercial building may not necessarily be one for home. So commercial buildings, residential buildings, vehicles, health. What else again? Okay, well there'll be life insurance. Have I covered all of them? No, not by chance. There's travel insurance.
Bro, there are so many different types of insurance products on the market. Some products are specific to some companies, and I tell you. So let's first just look at the insurance companies and their setup, and then we go into who do what in terms of products.
No, but I want to zero in on a product. Eh?
Yeah, no, we will. We will.
Right. Yeah,
we will. The insurance companies could be licensed as dealing in long-term insurance or short-term insurance, right? What we refer to as short-term insurance, insurance policies that are held where there's a contract for 1 year, and thereafter you need to renew it if you want to continue having that protection. So these are usually referred to as short-term contracts. Now you'd find that, well, before I go into this, and the other type of contracts, the other type of companies, one that deal with long-term insurance, right? So interestingly, there are some companies that deal with both. So some companies may offer you just the long-term products, some may offer you the short-term products, and there are companies that deal with both. Now, what are long-term products? Long-term products are one where the contract is for much longer than a year, and you don't necessarily have to renew them on an annual basis. So here's where life insurance comes in, because some life insurance policies, or most life insurance policies, will go for almost the whole life, right? So these are referred to as long-term products. The short-term products are usually done by companies that zero in on property and casualty insurance and that sort of thing. So vehicle, you mentioned house, right? The contents of your home. So not just your home itself, because you can insure your home and not insure your contents. So contents, then you have things like workman's compensation, public liability insurance, you have contractors, all risks. All these are various types of insurance policies that are available by companies that do short-term insurance. We can go more into, or we'll endeavor to go more into detail, and as we suggest, we'll probably zero in on one or two.
On a particular type of insurance. Yeah.
Because, as we know, this program is intended to be a long-haul program. And there's no need to, in my opinion, to confuse people by too much
information at one point, yeah.
Right.
So we give them the assurance
Yeah, that they will know more of insurance.
Yeah, we
So-
give them that assurance. Yeah.
So, and like we did last time, over time we'll invite maybe another insurance person who is, for example, although I do both types of coverage, but I have a lot more experience in life insurance.
Okay.
Right, that's my primary thing. But I also do the property and casualty insurance and so. But I don't claim to be an absolute expert where that is concerned. So I will take the opportunity to invite ever so often somebody who, when we're doing, let's say if we decide today focusing on one of the short-term products, I could get somebody. Stan is a good guy too. Stan has a lot of experience on that side of the fence. So on. Still, again, will I give you a range of short-term products, but here's some range of long-term products. Life insurance. So you have, within that category, you have term life that covers you for a specific time period. Then you have whole life policy that covers you for, that contract goes for right up to age 100. And hence the reason why you got the name whole life. Because there's an assumption by insurance companies that we'll all live to reach age 100. And some of the pricing or the products are based on that assumption. Although we disappoint them, a lot of us disappoint them, we die before.
Yeah.
But there is that assumption. And there are endowment, so even within the range of whole life policies, there are different types of whole life policies. Endowment policies are an interesting, very interesting type of insurance policy. Because most life insurance, well, all life insurance policies will provide you the guarantee that should you die, the policy will pay. In the case of a term insurance policy, should you die within the time period specified under the term, and in some cases there's term insurance for 20 years, some company offer a term policy for 5 years, up to age 70, up to age 80, some persons even offer a term to age 100. Once death occurs within the term of the contract, then the company is under obligation to pay. Once, of course, your policy is in force, meaning that it's active, you have been paid, right? If you stop paying along the way, you will have released the insurance company from that obligation, that liability as we refer to it. So there is the term life, there's whole life, but the endowment now, I was actually giving that preamble to show the endowment as how interesting an endowment policy is. It is a policy that will pay if death occurs. So you're held for a specific time period. During that time period, if death occurs, the company will pay, but the company is also giving you the added guarantee that should you live for the duration of the term, I'm using term now again, but in a different context. So you have an endowment policy for 20 years. Should you live to the end of that 20 years, the company will pay you a lump sum, the amount of money that you were covered for. So with an endowment policy, either way the wind blows, the company has to pay. It's for 20 years. At the end of the 20 years, the company say, look, here's your cash that you were insured for. If you die along the way, the company say to your beneficiaries, this man had intended to get this money down the road. When he died, here is it now. All right. So let me just finish. Then there's critical illness based policies that would pay now. It's not a life insurance policy, but it's sold by life insurance companies and will pay should you come down with any one of whatever amount of named critical illnesses. And some companies offer quite an extensive list of those circumstances / illnesses that would trigger a payment. So cancer, heart attack, if you do a major organ transplant, if you went in a coma, if you multiple sclerosis, if you develop Alzheimer's disease, and the list goes a long way. Companies will pay you on diagnosis of any one of those circumstances, right? And the consideration here is that, there could be increased medical cost occasioned by you now having to, just have a surgery to deal with cancer. Or you have a kidneys, and you have to deal with dialysis. Well, where is the money coming from? These plans are designed to put cash in your hand to deal with that. Right? Accident plans. Some plans, again, will pay in the event that you have an accident. And income protection and pay you some sickness or accident trigger that, then and you can't work, then you get a monthly income for a specific time period. Then there are health plans. Excuse me. The objective is to reimburse you for expenses incurred as your health plan would do. And travel plans. Well, these plans, essentially, they can do one or two things. Most travel plans that I'm aware of will pay in the event that you had an accident while traveling, so there's a life insurance component. And they also pay should you become sick while traveling. But they're not designed for any sickness or incidents within your own local. You can only buy them if you're traveling to another territory. So these are just some. This is not an exhaustive list of the different type of products they are, but these are just some, that even came to mind just prior to our starting the program in terms of the list of some products that are available outside there.
What I would like us to do, excuse me, this morning is zeroing on life insurance.
Yeah.
Because I believe that when you talk insurance, outside of vehicle insurance, I believe that the most popular one will be life insurance.
That's true. And there's a reason for that.
Yeah. Well, I guess there is.
Because what a life insurance policy is designed to do is pay in the event of death.
Mm-hmm.
Now, all of us will die. Nobody lives their life.
Hold on.
Well.
Careful with us thing. Careful with this us thing. Yeah.
Let me say that different. Nobody lives their life. You could decide to be part of that group or not. Nobody lives their life.
Lives where?
Yeah.
The studio? You planning to kill me? Yeah?
Yes,
Careful now, careful. Careful. Let's leave that alone. Okay? But nonetheless, life insurance is very popular, very, very popular. As believe behind property insurance and vehicle insurance, probably the most popular one. Mm-hmm. And I believe that most people want to understand a little bit more about life insurance, especially those who are not into it as yet. I must say this to you though. I met Johnny Charles, Johnny Biggs, as he put it. It was yesterday? And he was saying to me, he says, boy, thank you, Robert. Says, what happened to you, Robert? And he said, boy, I have a policy day. I didn't know nothing about the policy and I paying the policy. He says, now I start to ask the person in the company about the insurance policy. Apparently the person who sold him the policy, he didn't say that, but I got that impression that the person who sold him the policy is no longer there. Mm-hmm. So he now realized the value in what you said. Go and find out about your policy, because he's saying that he don't believe he knew half of what he had bought. And I believe it's a life insurance policy. Mm-hmm. So Johnny Biggs is one happy customer as it relates to you. Yeah, and that's the important thing. Please one person and you good.
Yeah, he actually hinted that to me. I couldn't stay for a conversation, but he basically told me that, boy, listen to all, and boy, I gained some real information and thing, So, but I was on my way to another engagement, so I couldn't really speak much longer with him. But why? Before we go even to the different types of life insurance, because remember I did say there are quite a few. Mm-hmm. Mm-hmm. Why would one need a life insurance policy? And that's a good place to start. Because
no, I don't think it is. I believe it would be better to start as to inside a day you probably can.
So let me start with the why.
Oh, okay.
Right.
Okay. Good.
The why under the ground barrier. It's not been donated the body to SGU or right.
They can do it now.
In that way, I don't know if they pay. To be honest,
they do.
Right, but
they pay you now. Like you can sell your body now, everything, and yeah, and you sign the document,
right,
and you.
So that's one of the first needs. In the event of my death, who buries me? Who pays for that? Now there are some people who say, okay, my children will bury me, and they expect their children to put aside the money. And while that may not be a bad thing, but what if you die when your children just take out a mortgage? What if you die, your child just had a major surgery? What if it happens at a point where your child is not in a position to easily find that money? Then you're putting that particular child or children under financial pressure. So it's a good thing for people to look at, you know what, I need to, when you look at your insurance planning, it's a good thing to look at funeral expense. And now you can there are other issues, but I won't go into that today with respect to estate planning and all of that, and the other needs for cash at death, right? Transfer of your property and all that, and the cost associated with that, but I won't go into this now. So that's one, funeral expense. Two, income replacement. Do I have people who depend on my income for the survival? If the answer is yes, then the next question is, so what if you die? How are they going to survive? So I have children, I have 5 children, or I have 2 children, or I have 1 child. But once that child is in the dependency stage, meaning that they're not yet an adult, they're still going to school, they depend on you to provide an income for the basic necessities, then it is good to consider, what if I die before that child becomes an adult? How will that child continue eating? How will that child be able to still dress well and go to school? Are they going to be able to, when the ice cream van passes on a Sunday, ding, dong, ding, dong, ding, dong, ding, dong, ding.
That's not a good song.
And dong, dong,
That's
ding,
still not a good one.
what? You know this one? Dong, dong, ding, ding.
That's an election song.
Yeah.
CDLP.
Seriously. The symbol is a nutmeg.
Yes.
But that's a different story.
It's a different story altogether.
Yeah, but a simple thing as when the ice cream van passes and the child runs home, they expect mommy to have $2, $3, $5, whatever the cost of the ice cream, to buy an ice cream, right? And mommy can't buy because daddy died. And since daddy died, pressure in the house financially because his income is gone. And there was no provision. So even a little thing, so while the other neighborhood children licking the ice cream and so, she come inside and she crying.
Yeah.
Right? As simple thing as that. But it is not simple because psychologically that child could feel I'm less than. Just because every time the ice cream van pass, we can't get. Oh, I have to go and beg Peter for some in his. You know that sort of thing? So, income replacement. Ensuring that should I die before my children get big, or should I die, I want to ensure that my standard of living home, that we enjoy in home, that
continues.
I creating continues. Then there is education. Excuse me, cash for education. And I'm speaking education here. Yes, we may look at primary school, may look at secondary school. A lot of people may be able to do that, even with some assistance, government assistance program and whatever else. They might be able to to pull through.
Mm-hmm.
But when it comes to university education, that's where the whole, that's where the doo-doo hits the fan.
That's when the shit hits the fan.
Right? Because it costs so much money. And some people just not in a position to do it. At the time when you need to spend $20,000 a year for 5 years or $30,000 a year for 5 years, it's those kind of figures. Barring a scholarship, and that's why we need to push our children, do your very best and let's hope we get a scholarship. But even a scholarship is not guaranteed. So you need to put aside. And the best time to start this kind of planning is when the child born. Because now you have the advantage of time. If it's 20 years before they go to university and you start from day one, then you have 20 years to save that $20,000 or that $40,000 or that whatever. But you can also now use an insurance policy. And that's where an endowment policy can work well. Remember I said an endowment.
And that's another type of life insurance.
It's a life insurance policy.
It's a life insurance policy.
Yes, but it can work well because remember at the end of a period it pays. Right? Then you have, so we look at so far funeral expense, we look at income replacement, we look at preparing for your children's education. And let me just make preparing for children's education, you want to do it 2 ways. You want to look at what if I die or what if I live? Because there's nothing saying that you will die before your children go to university. And there's nothing saying, and we can't guarantee that you will live to see your children go to university. But if you really want them to have the cash, then you need to approach it 2 ways. Cash in the event that I die before they go. Cash in the event that I live to see them go. Right? Everything else we have discussed so far is triggered, by death. But preparing for your children's education, you have to look at what if I live or what if I die. Right? Then there is mortgage protection. That, more than anything else, these days are driving the need for insurance sales. Interestingly, because everybody wants to own a home, the average Grenadian, they see themselves as successful when they could turn their own key. And that's fine. That's fine. It doesn't happen in a lot of other islands. All right? The home ownership in Grenada is a big thing from a cultural standpoint. And it drives the need for insurance, because when you go to get to the financial institution and you say, listen, I make $1,000 a month, I want to build my house, the house would cost $100,000, they say, okay, you could repay that $400 a month over X. I'm just using figures, just to establish the principle. $400 a month over 25 years, 30 years. The assumption is that, one, you would live for that long to finish pay them off because they want to get paid off. Or two, that you will be employed for that long and be able to pay them. That's the assumption. Of course, they're in the business of taking a risk. Mm-hmm. So they are taking a risk, a good moral risk in itself. We believe that you will be somebody that will continue owning, so you'll be able to pay us for 20 years. But what if he dies along the way? Now, it could be an accident, or you could go and sleep and don't wake. Then the option that you have is to sell the property. But which institution really enjoys putting up a house for sale when that man, wife, and children is still living in the house, or putting them on the street?
The bank.
Institutions will do it if that's the last resort, because they monetize and they're getting money out of that property.
Then they enjoy it.
Then they what?
They enjoy it because they get their money.
Well, they have
Nobody's sad getting money.
Put it this way. I was involved with a financial institution as a president and signed documents to have people's property repossessed and put up for sale. It was never a good feeling. No, in my position as a president, you can be asked, well, you have this X amount of what we call bad debts. What attempts are you making to recover them? As a president, you have to answer that. You have to show that you have been doing things to try and reduce or eliminate your book of bad debts. So the times when you have to do what you have to do, in that context, I don't know the bank enjoy doing it, but I know that you have to do what you have to do. Excuse me.
I just want you to stick a pin, Bobby. You have to do what you have to do. Stick a pin right there, because I want you to also take a note of this. Mm-hmm. And it is called, my caption, the black side. Or, let's rephrase that. The dark side. Mm-hmm. I would love for us to do so, and one day discuss the dark side, because that is the dark side of business. The signing off on, we are going to sell that house and we have to give the family 3 months to leave the property. That is the dark side of business that a lot of companies, institutions, whatever, never speak to. And we need to do so and speak to the dark side, because I believe it will give persons a better appreciation of what is. And then they will know that we do not need to ever get ourselves or put our families in a position that the dark side has to come.
Yeah, you're sure right. You're sure right.
We need to discuss the dark side.
And it has to do with planning.
Mm-hmm.
This program, again, is to help people to understand what is out there, what are the risks we face in life, what are some of the circumstances that could challenge our ability to own, and how do we guard and protect against those. That essentially is what we're trying to accomplish. Now, on the issue of the mortgage and the dark side of a mortgage.
The dark side, yeah.
You can also discuss issues of how could you reduce your mortgage interest over time, all of that, because, there are ways, creative ways to try and end up paying as little interest, or let me say it different, to try to reduce your total interest payment over time, but that we can do over time. Mm-hmm. So that, coming back to the institution wouldn't want to put you out of the home, wouldn't want to put your family on the streets, but if there's no other option, they will. Folks, listen to this. They will, right? Remember I said I've signed documents to repossess people's property, to repossess their vehicle, their house, and so it never feels good, but I have to put my signature on it because of the position that I had. And the institution has to get their money back, so they will do it. So the banks and other institutions it is ask you to get a life insurance policy because what they are guarding against is should you die prematurely, die before you finish pay them off, before you finish clear off your indebtedness, then that insurance policy pays. It's assigned to them, so they own it during the period of your indebtedness to them, and it guarantees that they will be paid off. So breathe a sigh of relief. If unfortunately you die, that is the grief the family will have to deal with, and that only, as opposed to having to deal with that grief and the added stress of them having to leave because daddy died.
So once you have that insurance that covers whatever with the bank, then when you die, the bank will, the insurance goes to the bank, and is it that they will take their portion and give the family, or they take it all?
No, they can't. They can't take it all. Because the arrangement you'll have with them is that the balance of your indebtedness will be cleared off. So if the value of the policy is higher than the value of your debt, then there's some residue. So if you owe them $100,000 and the policy is $250,000 because it was initially $250,000 you owe, but over time you would have paid down, so your total indebtedness now has reduced to $100,000. The insurance company is still obligated to pay $250,000 because that's the contract you have with them. If you have such a policy, because there's a caveat. There's some policies where the coverage reduces over time, but they're not as popular as they used to be before. They were specifically used for mortgage, so you just cleared off the indebtedness as at the time of death. But the policies that are prevalent now are ones where the value is fixed, it's not reducing. So if you had $250,000 from the start of the policy, it's going to be $250,000 right to the point of death, if it's one of those whole life or so.
Just to let persons know that you can WhatsApp your questions, and also you can call if you so desire and you're in the position to call and you want to ask Robert a question. Feel free. 442-0175. That's the number you can call. Landline, if you would like to call WhatsApp, it's 442-0175. Also, they're both landline and WhatsApp. That's the number. And you can WhatsApp us a question or a comment. And a comment here, Bobby, you might not like this one. The banks and credit unions are more keen on lending monies to buy vehicles rather than land or house these days because of the quick profits which are tied with insurance companies.
No, I well, I don't know that the profits are tied with insurance companies. I know that the short-term loans are they generate more in terms of interest return because usually the interest rate is higher than a mortgage. Now you would make more money on a mortgage over time, but remember a mortgage is long-winded. 10 years, 15 years, 20 years, some cases 30 years plus. So you make more money over that period, but in the short term, the vehicle loans and land to an extent, they generate quicker revenues because the interest rate is higher. So I know that the institution, some institutions may want to balance a book of business. They would want to ensure that they have a significant amount of money in mortgages because of mortgages long-term generating. And they want to also have some that give you the quick returns, like these short-term loans, demand loans as we refer to them. So any financial institution will want to look at the book of business and make sure that there's a good ratio between mortgage loans, and the other short-term demand loans.
Let me ask this question here, Bob. I do not have insurance for a property that I would have taken a loan from the bank or gotten money from a financial institution to back that. However, I am paying for the property. I'm paying the loan in the bank. I'm meeting my obligation. I die. My family, however, cannot meet the obligation in the bank. So therefore, the bank has to move in and sell so as to recover what is theirs, correct?
That's correct.
Now, what do they do? I owe them $20. That's what I owe them on the property. The property, however, is worth $100,000. Do they move in and sell for $20, or do they sell at market price, which is $100,000?
No, the institution will attempt and would make every attempt to get the property sold at market value. But here the interesting thing. Now, another man's gain could be another man's downfall, or another man's downfall could be another man's gain. So, for a property to be sold, you must have a willing seller and a willing buyer. And there must be a meeting of the two, right? Agreement on price and all that. Unless that didn't happen, nothing ain't selling. Yeah, I could put up all my houses for sale. I had 10 of them, right? And
oh, you do? Didn't know. Thanks for telling me.
For the purpose of this example, for the purpose of this example, and well, nobody really come in and check me on my house because of maybe condition of the house, maybe location, maybe pricing. Nobody really interested. I just have my house for sale. So if the bank is faced with a situation where they put a property up for sale, they would of course want to get the fair market value. First, they would try to. But if they, over time, do not get the chance to do that, meaning that it's up for sale, it's been up for 6 months, going on a year, and nobody is coming to pay the $300,000 we're advertising, or would like to get for it, then they may take the next best offer, right? And if they even have to, there's a thing where I think they put it up for sale, and it's kind of escaping me here, but you put it up for sale, the next time it goes up for sale, the value goes up by 10%, and the next time by 10%, and that's sort of thing. Right? And that is
so the value decreases. Even if the market value is up there, but the value of the property can decrease based on the fact that the sale has not been met.
Market value is one thing, but at the end of the day, the bank or the financial institution can hold it for 5 years.
No, I'm saying, but I understand that. I understand. The market value is $500,000. However, because it may be what is a seller's market and not necessarily a buyer's market, that $500,000 nobody's willing to pay, or nobody could pay that right now for that. So the next time it goes down and down and down. So it may even go down to as little as $10,000.
Right. So here's what happened when I made the comment that another man's downfall could be another man's gain. So Andre's family can't they can't pay the mortgage, and the bank has decided to sell the property. I keep saying bank. Let's say financial institution. Because,
the bank, man.
Because, the credit unions are into the same type of business. So the financial institution or the financier cannot get their monies out of that. Because here's what the institution wants. Their money back. Because it's the money, the cash on hand that they are using to generate other business. To lend somebody else. I can lend somebody piece of Andre house. Even if piece of Andre house might be valued at $100,000. I need to have $100,000 cash to lend that man, right, to buy a car, to buy something else, and if it's a land or so. So they're dealing in cash. They don't want to hold all these assets on their hands that they have for sale, looking good on their books, but they don't have cash in hand. So I hear Andre house up for sale, and the bank or financial institution looking at selling the house, but Andre family can make it. And the market kind of tight now is $350. The property is worth the $350, but I am paying that because I know the price will go down, right? So I going to like cricket now, filling in the slips because eventually I know they probably second time they put it up for sale and knock off it 10%. That is $35,000 right there from the $350 initially. But by the time you reach the third time, another $35,000 might come out again, or another 10% of the difference between $350 and $35. So I need it. No, I have money. I may not absolutely need that property. I want to use it as a business. Maybe it's a good place I could buy and rent and sell, and that's buy and fix up and rent. But I don't want to pay the market price. So I there and I'm waiting, because this now represents an opportunity to me to get a property that could easily be marketed at $350,000, but I get it for $200,000, $250,000. You understand? Now, to guard against that, a well-designed life insurance policy is the answer. So it gives the family peace of mind, the breadwinner peace of mind, it gives the bank peace of mind, knowing that, hey, in the event of death, we have to go around fighting to sell the property. The resources, human resources in the bank, and other resources, without us spend time trying to go and sell property. We just have a conversation with the insurance company. We send in a claim. We get paid. The family leave the house. The family leave the bank smiling because our house is ours, even if daddy died. The bank shaking your hand again and asking you, are you interested in other business? Because they got paid and they want to keep you as a good, valued customer. So they want to encourage you to continue doing business with us, because they know that the loan was $100,000, but insurance paid $250,000. So you have $150,000 in hand. You may want to do some business, additional business. So they're hugging you up and they're giving you tea and coffee and things, and making the manager have a conversation with you.
Can I tell you something? Real FM is what, 17 years this year?
Yep.
Never had a bank manager hug me and shake my hand and give me tea.
Well, boy.
That means something wrong.
No, that means you're alive. I was thinking in context of death.
Here, just to let folks know that if they send me a question on WhatsApp, I will repost the question on the Facebook page and on YouTube and the website. And it will show up as if Real FM is making that post. Yes, we're making the post, but it doesn't mean that the question came from us or the comment came from us. Here's something that you somebody says, it's Samantha Dixon. Good morning, Samantha, and thanks for listening. Samantha says, yes, Andre, the dark side. Financial institutions will sell the property just to make back what is owed to them and not leave the family with cash in hand from a fair sale. Imagine a family paying 15 out of 20 years. The lone breadwinner dies. Family still ends up on the street. The dark side. Good education on the matter.
And so this program is designed to avoid those circumstances, Samantha. Because people can do otherwise. As a matter of fact, quite frankly, the financial institutions these days, they lean a lot on insurance policies as security. It may not be the only thing they would ask for. It might be one out of a range of other securities that they may try to. And there's a nice terminology that they use in this business to perfect the securities. Make sure securities are perfected.
But this aside, Bobby, I really think that the financial institutions and all of them across the board, they ask for just too much when it comes to perfecting
their security.
They just ask for too much. It's just unbelievable. I mean, come on. This does not happen in the modern world today. Here's another one. Question: can an individual take out a life insurance policy on another individual? I.e., can John James take out a life insurance policy? And why are you saying Andrew Donald? Well, John James is the beneficiary.
No, wait. I don't mind they use Andrew Donald. We must try to figure out who is John James.
Yes, I had to be careful.
That's a very interesting question. And the answer is yes, and the answer is no. Here's what I mean by that. Now, to take out a life insurance policy on the life of another person, they must first establish insurable interest. Now, insurable interest is established when the person you were trying to insure, their death would result in either a loss to you financially, so it result in a financial loss, or it would trigger an expense to you. right? Let's take that again.
Yeah.
Insurable
Explain that in English.
Insurable interest is established when the person whose life you're trying to insure. So you, Andre, want to insure Robert. So Robert's death must either cost you must be an expense to you, or deny you the chance of income. So a husband can insure his wife, because if she dies, he had to find money to bury her. That's an expense to him. And her money is not coming home again, so that's a loss of income to him.
Okay.
So a husband can insure his wife. Father or mother, a parent can insure their child, because the death of that child will cause them an expense, will trigger an expense, right? A business partner. So you and I running a business, I can insure you. As a matter of fact, there is something called the crisscross arrangement. Some people refer to.
So I insure you, insure me.
Yes, so that this business is valued 100,000 and we own it. We own it together. So you own 50, I own 50. But if I die, because we partners, if I die, my share would not automatically go to you. My share go to my heirs. But is this radio station here we running, and I'm a good DJ and you are good? I don't want to use announcer again, but let's say something else that fits well into the realm of more running this operation. So our combined skills make this thing work perfect. But my wife don't have my skills. So you end up in business with my wife, and she has as equal rights to the business as you do now, by virtue of the fact that she is now my heir. But she don't have the skill that I have. So you under stress running this operation.
And she might want to sell.
Well, it's not just, and she might not even want to sell to you.
That's the next thing.
She might be getting a better price from a competitor down the road who had the eyes on Real FM all the time. So if we want to guard against that, you say, you know what? Let's do a crisscross arrangement. It's something called a buy-sell agreement too as well. So I buy insurance on your life, you buy on my life. So in the event of my death, the cash that comes to you, you're obligated to pay off my wife. Now you can take that money and decide, you me, I forget in this insurance business, I just get some cash in and I go online. You can't do that, because as the agreement binds you into buying my wife's shares and vice versa.
Okay. So
that she walks away with monies from my 50% share of the business, and you now have 100% of the business to do what you want.
I see.
Right? Let me just on the issue of insurable interest. So yes, a husband can insure his wife. Yes, two people in business can insure one another. Yes, a parent can insure a thing. Yes, a godparent can insure a godchild with the consent of the child mother or father. But I can't insure Joe Biden.
Why?
Because Joe Biden's death will not cost an expense to me.
Of course.
And neither will it.
Biden get a visa.
Neither will it rob me of any income. So unless we cannot establish that, we can't insure that person.
All right, here's another one. Person says this is a real life story. Approach a financial institution for a land loan. An officer at the institution turns down the loan, but approaches the seller to buy the plot themselves, making a higher offer. Also happened that an officer from a legal institution tried that as well.
Unethical. The answer is one word: unethical. But sometimes in the business world, those things people get you with that, but that's unethical.
That one shocked me, and I've heard it I've heard that it takes place, but I kind of didn't want to believe that that is a reality. I didn't want to believe that is a reality.
This is the real world.
But when things like that happen, that is why people do so and kill people. And that's the bottom line.
I wouldn't encourage them to do that.
I wouldn't encourage them, but it happens.
Yes.
Yeah, it happens. All right, what is J Wonder saying here now? Let me see if I can show it on the screen. J Wonder brand, more life, more love, more blessings. What's the difference between life insurance and term life insurance? J Wonder, which is better, term life or whole life?
J Wonder, morning. It depends on what your objectives are. Now, A term life insurance policy is designed to provide protection for a specific time period, full stop. So if you have a term life for 10 years, the obligation of the insurance company is that if death occurs between that 10 years, the insurance company is on risk, they will pay. But if you live up for year 11, they are not on risk in year 11 because the contractual time period has expired. So it's like you took a loan from the bank for 5 years and you finish paying 5 years. The bank can't come and ask you nothing in year 6 about payment because we finished that already.
Yeah.
So that's how a term life works. It is for a specific time period. After that time period ends, there's no coverage.
Okay.
The other feature of term, it doesn't bill you any cash value. So we usually like to say there's no living benefits, meaning that you can have cash accumulation, right? Because it is that way designed, it is a lower cost product. A whole life policy, J. Wonder, will, in addition to providing insurance for an event of death, well, first and foremost, a whole life is going to be for a longer time period, usually up to age 100. That's why it's referred to as your whole life. And in addition to providing the protection, right, it also builds cash value. It is designed so that at age 100, you should get that lump sum of cash in hand. So if you had a $100,000 policy that would pay in event of death up to age 100, if you live to reach age 100, that policy matures. Similar to how the endowment works. A whole life policy at 100 is like an endowment policy, essentially. Okay. But it builds cash along the way because that cash that you would get at age 100 doesn't just automatically appear at age 100, but it accumulates in portions over time. So because it is that way designed now, a whole life policy usually is more costly than a term life policy.
Speaking to, well, we spoke about what Samantha spoke to, White, in relation to what is considered to be insider trading kind of thing. Right. Somebody's saying there's merit, but lots of perceived thoughts of insider trading. So there should be laws to protect same. Are there enough laws in Grenada to protect same?
I am not sure, I am not sure. Of course, people in those positions should be guided by, one, the fiduciary responsibility, and two, the conscience. And sometimes conscience plays a big role, right? Because the human being is wired up, Andre, where there's something that tells you, and this doesn't feel right, this doesn't smell right, this doesn't look right, and sometimes we ignore all those.
Looks like a duck, quacks like a duck, moves like a duck.
So that person who went and made a higher bid turned down a loan, and in your position, because you have information now, you went and you made a higher bid, and probably get through because the seller was happy now to get an offer for a bigger payout. But that person must know somewhere inside of them that they have not done something that is right.
I've even heard that this thing happened in relation to cars, vehicles, and somebody going to a financial institution and sitting down and speak to someone about a car that they'd want to buy. They want a vehicle loan, and then they tell the person all the details
because they have to
about about the car, and the person said, okay, fine, make them sign up all documents, whatever. And 2 days later, the person who went in for the loan sees the loans officer driving the car, and then is called a week after the 2 days later to say, your loan was not approved.
Well, okay, so if the loan was not approved, and sometimes it gets gray. If a loan was not approved, there must be reasons and conditions.
But they can give you any reasons, so you can't do none.
No, I know you can't. But I'm saying that if your loan is not approved, you should know that before you see him driving that car.
So they don't care. But why? Because there are no... Hold here. They don't care because there are no laws to protect that. That happens in Grenada, and anybody, oh well, I'll do, and they move on.
I don't know if there are no laws. I said I'm not sure.
Then you need to find out.
Yeah, because there are a lot of laws on our books that a lot of people are not aware of, And because you're not aware of, you don't pursue it. And then even again, some people don't pursue even if they know, because they figure, well, there's water under the bridge, and let's have a way of saying, leave him to God. Which is not a bad thing, because God always fixes things. Always.
His way.
He always fixes things.
His way.
In his way.
Yeah.
In his way.
I mean in my way. I mean in my way. Here's what. There's a different spin. But let me tell you this, yeah? Ryan, we need to bring him on the program live.
Yeah.
When I say live, like hook him up one of these days, we need to. Simply because Ryan is following this chat so very well that there are questions that Ryan is answering.
Very good, very good.
Even before we get to it. Like, for instance, whole life insurance is expensive unless you get it at a younger age, right? That person's...
Ryan, that's one thing I disagree
No.
Hold on.
Ryan didn't say that.
Oh, not Ryan.
That's what I'm saying. Hold on. Right? Now, Ryan, immediately that person put it up, Ryan put, cost of insurance is relative to the need it addresses.
Oh, my brother. Oh, my brother. That was essentially, maybe not verbatim, but that was essentially my reaction.
Yeah.
Because, Andre, I know there are persons who pay $100 a month for insurance. And I know there are persons who pay close to $5,000 a month for insurance. Now, Ryan is so correct. And the $5,000 person is whole life insurance. Why? Because of the need it addresses. Now, you may have business persons doing that because the money may not necessarily be coming directly from their pockets, but as a business expense. But it is important that the business has adequate insurance on the life of a primary person, key person as we call them, so that in the event that that person dies, the business has cash to continue going. Right? Now, look at it from this way, Andre. As a key person in Real FM here. I remember we were speaking...
Hold on, don't go indicting on me again.
No. Well, you father, you game, you use me and you are here. Now, what you do in Real FM, I'm not saying nobody else can do it, but I'm sure if you get somebody else to do it, they will not do it at what you pay, the rate at which you pay yourself.
Nah.
Exactly.
Nah.
So imagine Andre is not here, and we need to get somebody who will do as much as Andre is doing, as good as. It may be somebody who would ask for maybe 2 or 3 times what you pay yourself.
More, yeah. And they might spend less time.
And they might spend less time. But if you want the Real FM brand to continue,
you have to do it.
You have to do it. So it is important to have a system in place that, hey, but if I'm not here, but I want my brand, because Real FM is your legacy, then there's cash to have it. Remember I said the money talk? Insurance is really about money. Providing money. So there's money to do what Andre has been doing, even if it costs more, because Robert doing it now, but Robert is not going to work for what Andre is working for. But we want Robert because Robert could keep it going the way Andre
keep the brand.
Exactly.
It is real. It's 91.9, 91.5, www.therealfmgrenada.com. Now, nobody can do it like I just did that.
No, let's try.
Forget it, bro. You can't do it. You can't do it.
Yeah, we're laughing, man.
Well, I can call from a laugh and do it.
Okay.
I can call from a laugh and do it.
Okay.
I'll give you this one. This is a behind-the-scenes joke, but I'll give it to you, listeners. Here's what. So I had a very important call to make this morning, and I'm on the call, and Sister Annette Julian is praying, but I have to be on the call, so I can't follow the prayer. I just have to keep a distant ear out because I have to concentrate on what I'm telling the person. And I hear Annette say, "Amen." I realized, shock, she done. So I said to the person, "Hold on." And I hit, "Good morning, Sister Annette, blah, 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 blah." I was nowhere close to Annette and praying. I confess. Never nowhere close. But I was on a call, tying up something that had to be, and that's the only time I could have gotten the person.
Right.
So it's things like these. If you see people doing things like that, like if I see another worker doing that, I'm like, "Yo, what are you doing?" You ain't supposed to be doing that. But of course, Andre is Andre, and Andre will do things like that. But am I to believe that, based on the conversation that we've been having, we have only scratched the surface in relation to life insurance?
Oh, yes.
So then, because we only got like 15 minutes to go to the 9 o'clock hour, so it means that we're definitely into life insurance again next week, God's willing.
Sure.
I would like to get a different voice. Are we going to go to Stan, or are we going to go to Ryan?
Ryan, let's if we're doing life, let's get Ryan.
Okay.
Stan, as I said, is more on the short term thing. He has a wealth of knowledge. He might know about life too, but I'd really love to hear and defer to Stan when it comes to the short term property, casualty, vehicle, that sort of thing.
Here's a big question, and I'd ask this one even before Ryan gets on. I'll ask this one now. Can I take out an insurance policy here, Bob White? I have a child, have an insurance policy for that child. Child travels. Should I continue paying that, or should I surrender and call it quits? Because the child now is no longer living in Grenada. The child lives in another country. Should I surrender that, or should I continue paying the insurance? And if the insurance finds out that the child was not domiciled in Grenada at the time of we'll find out anyway, at the time of death, will that insurance still pay the claim?
And the answer is yes. Right? There's nothing binding you to this locale except there are some places that insurance companies are wary about now. So in signing up the contract, they may ask you, do you have, they may seek to find out information about your travel plans. And if you can establish, or if the information you give them then says that you will be going to one of those areas that might be war-torn, or, there's serious civil unrest and so, the company may choose at that point in time to say, no, we're not we're not selling a life insurance policy because, there's a high risk area you really want to go. And we just not people to take the risk. Even if you domicile here, but you want to travel, because you may be traveling, not permanent, just temporary, but you're coming back, but the risk involved while you're out there, because the companies knows that they will have to pay anyway, irrespective of where you go, but they may not necessarily want the risk associated with travel to that particular area. That is if you take not a new policy now. But you would have had a policy for 10 years, and there's nothing in that policy that precludes you from going to any one of those places, because it's not written into the contract. Wherever you go and you die, the company is obligated to pay. They have to.
If I travel to, say, St. Vincent, God forbid, but I travel to St. Vincent and something happens there, and I did not tell the insurance company, well, I'm traveling to St. Vincent for 10 days, 1 week, 2 months, whatever, and something happens there, do they have reason not to pay?
No, they do not have reason not to pay. If you see, unless you would have established, usually at the point of application, there is information that the insurance company may capture.
For instance?
That may, like, for example, going back to the same issue of travel, that this is, all right, so I work with the UN, for example, and I plan to go to Kosovo and another place where you had some serious upheavals and so. An insurance company may not necessarily give you that insurance policy. But if once you'd have had a policy, because you were not necessarily on that high risk, or you were not considered a high risk, so there's nothing written into your policy that prevents you from going to any one of those jurisdictions, or that says we will not cover you if you go in that specific jurisdiction, then you can go. The company is obligated to pay. Now there are circumstances, for example, John Gotti, one of the known mobsters in the U.S., applied for insurance one time, right? And was denied because he was a known mobster. And the insurance companies, okay, it wasn't one company that turned him down, just figured this is a walking claim. That anytime you could hear a bullet in his head, right? Now the man lived to reach a good old age too, I think, you know.
Yeah, he was about 80 something.
And died natural death.
Natural death. So the insurance lost the money.
But they were not people to take the risk because chances that it could have been a claim the next Friday, right? So circumstances like that.
Are you telling me, therefore, Robbie, are you telling me this, and this is probably something that people need to know, are you telling me that a policy for me sitting inside of here is an easier risk, if I can use the word that way, easier risk for an insurance than them insuring a bus driver?
In a way, yes, right? But again, they would look at statistics. So yes, there might be plenty of accidents as a bus driver, but how many bus drivers die in accidents in Grenada?
Okay.
Right? May not necessarily influence, although the risk seems higher, but may not influence a different pricing. Right? But in terms of the principle, you're correct. There are some vocations that are less hazardous. And let me give you an example. A police officer, his job is to, looking Grenada, his job is to protect and serve. As a matter of fact, that's the motto of the Grenada Police Force.
Correct.
To protect and serve. There are some benefits on a life insurance policy where police officers, security officers, army personnel, they pay more for. So there is a benefit that covers accidental death and dismemberment. So death occasioned by an accident, it provides a payoff for that, and dismemberment, the loss of a limb, hand, foot, and eye through an accident, that it covers that benefit. Police officers, army personnel, security personnel, that benefit they will pay more than the ordinary civilian. And here's why. Now, if I am walking on the road as a civilian, I am a police officer. So we go down the road, we chatting and we go down the road, we're taking a casual stroll. He may be on duty or maybe not on duty, it doesn't matter. Because police officers are always on duty, quite frankly. Even when they're off duty, they're on. You can't,
that used to be the mantra.
Well, a police is a police. They can't say I'm off duty, so I'm not doing the XYZ.
I ain't even doing it. Yeah, leaving that one right there.
So we swing around the corner and there's a madman brandishing a cutlass and threatening everybody, including the two of us. Now, I as a civilian could just take up my shoes and run. The police officer has an obligation to subdue that crazy fella, whether it be him by himself or whether he call for backup. But his obligation is not to leave this situation.
His obligation is preservation of his life. So he gone too.
No preservation of my life.
He putting on spikes. You taking out shoes, he putting on spikes.
So he has, as a police officer, there's what you call a vocational hazard. A hazard occasioned by the fact that his vocation now would have him to try to subdue this man. And in so doing, he exposes himself. That's a risk. So while I'm running, because I'm running from the risk, he has to try and contain the risk, and he is exposed in the process.
Okay. Final question for you this morning. Which life policy can you use to take a loan against? I.e., go to the insurance company and ask for $20,000? No, $200,000? No, $200 based on where you put a point in that one. $200 against my policy. I guess but somebody wants to know.
Okay. Insurance policies, a whole life policy, allows you or qualifies you to get a loan. Now, there are two types of loans available on your whole life policy. There's one referred to as policy loans, where the extent that you can borrow will be based on the extent of your cash value.
Okay.
So if you have a whole life policy that has a cash value of $10,000,
Yeah.
some companies may allow you to get a loan of up to 80 to 90% of this. Some companies 80, some could go as high as 90. So, but here's what this loan is. This loan is essentially a self-secured loan. Now, on your whole life policies, the insurance, if you have a need for cash, the insurance company cannot give you the cash on the policy unless you decide to close that policy. And there are policies that allow you to make a withdrawal. You have there, not a whole life policy. Whole life policy doesn't do that. How it is constructed is that the monies on that policy you can walk away with if you decide you're closing or terminating the relationship with the insurance company. Whatever monies you have there, they write you a check for it and you walk away. But if you want to maintain the relationship with them and keep the coverage, but you also have need for cash and would like to access cash in the process, and there is cash on your policy, the cash value, the company says, okay, here's what we're going to do. We're going to use that cash value as security and give you a loan of up to 80 or 90% of that policy. So let's again use the example where you had a $10,000 cash value. The company say, depending on which company, you could get a loan of $8,000 or as much as $9,000. Now, at the end of the month, you are now paying back your premiums as you're contractually obligated to, and now you have to take care of the loan. The loan is a separate arrangement. The loan is just like you'll get a loan from any other institution. And if you don't attend to that loan, you will have problems. You could even lose your policy. If the interest on the loan and the outstanding principal on the loan exceeds the value of your policy, you can lose it. So you want to make sure that when you get a policy loan, that you set it up in terms of the repayment now, the same way you would sit down with a bank or the credit union or any other institution that does loans, and do a scheduled repayment plan. I work with my clients to do an amortization schedule. So we say, okay, you're borrowing $10,000. How long you want to pay it over? 4 months. This is what you need to pay off. How long? 4 years. This is what you need to pay. How long? 3 years. This is what you need to pay. Scheduled payments every month. In so doing, you don't run the risk of losing your policy. And guess what? The more you pay, or when you pay, you actually know, because the cash value always increases over time.
Yeah.
So you get more loan taken.
Right.
No, well, that's one. That's the policy loan, but there's also automatic premium loans. That's another loan you could get on a whole life policy, which is essentially the company giving you a loan to pay your premiums because when the time comes, you didn't pay it.
Right. I said final question, but you have one here from David Charles, and he's asking, can someone take out a life insurance policy at age 60? Yes or no?
Yes, man.
You could.
You can get policies all up to age 80.
Okay. And J Wonder has here, he's always going complex. What is mutual life insurance index fund? What the heck is that?
That one, J Wonder, I do some research on it.
You better write that down.
Because that
What is mutual life insurance index fund? Got that?
index
Good.
fund.
Yeah. Now, the final question is this, Robbie. The information given here, is it pertinent to somebody in J Wonder's case who lives in New York? Is it the same language?
Yes, man. For example, the question, what is mutual life insurance index fund? Now I have an idea what the question is, but because you may have policies specific to some particular jurisdictions, and there's some products that work up there are not necessarily offered down here. So I need to do a little research on it. And sometimes products can be similar in nature, but the name a little bit different kind of thing, so.
Bye-bye. Thanks so much for another wonderful program. I hope our listeners would do appreciate the information that they've been given. And next week, God's willing, you're going to set it up with Ryan. You can be in contact with Ryan, correct?
Yes, I can.
Why is Fluffy calling when Fluffy knows that this is a let me see why Fluffy is calling. I'm going to play thingy now and see why is he calling. Why? What is his problem? What is your problem?
Andre,
Yes.
ask Hubert for me that.
Not Hubert, Robert.
Robert, ask him for me if you open my life insurance. somebody's dying and can't get the body to the school fees.
Hold on there, Fluffy. Let me make sure I got you right. Robert, he wants to know if somebody dies, the life insurance policy, and you do not have the body, what happens?
Fluffy, where's going to
Fluffy, where?
All right, no. What one of the conditions for paying up a death claim is you have to provide a death certificate. I do not know that you have to provide the body. You have to provide a death certificate. Of course, the body is physical evidence that that person really dead in truth.
Mm-hmm.
But the insurance company never asks you to, let me see the body.
They want
the death certificate. You need to bring back the insurance contract or the policy. You need to get a doctor, say, who last attended to the deceased. You need to get a claimant's statement. So, Fluffy claiming because his brother went to sea and the NC
never came back.
Now, the laws of Grenada says that claim can be deferred to as long as 7 years. Right? So, Fluffy ain't going to be able to get that because he can't provide that. If he doesn't have a death certificate, that states the cause of death and all that. Because the man is not, well, nobody knows he's dead. We just can't find him. And there's an assumption of death. But after 7 years, the assumption is legal that a man dead in truth. So it can come to, of course.
What if he comes back after 7 years?
I expected that question to come to. What if, interestingly, if he come back after that time, for the insurance purpose, he dead. He dead.
I find we just talk dead right to the single song.
Anytime we're talking life insurance,
yes,
you must talk dead.
Boy, thanks so much, man. And I feel really, really good to know that the last question came from someone who is, well, I won't put him at high risk, but who has a certain risk because he's on the road daily, and we wish him and all his compatriots, all bus drivers, wish them all the best. But it's like saying to them, and the fact that he's listening, I know he will spread the word to others. If they don't have life insurance or health insurance or whatever, or accidental insurance, whatever, probably they need to do so and walk into an insurance company and say, hey, let's talk this. I'm not going to tell you walk into Robert's company, no. But if you see him and you figure you want to talk to him, I'm sure he'll be able to give you some time. Bye-bye, thanks so much, and have a wonderful day.
You're so welcome.
Okay, bro.
Bye, listeners.
All right.
You go when you're walking. What you say when you're talking. You gotta be careful.